This week, journalist Fiona Harris has looked at what retail investors can learn from the big end of town, that is, the large super funds. Today I have Fiona in the studio with me. Thanks for joining me, Fiona.
Good morning.
The big super funds have just announced quite large losses for this year, so is there still a compelling reason as to why retail investors should pay attention to what they've done?
There is, and it might be a little bit hard for a lot of investors to understand because when they open their statements, the returns aren't great. Some of them are looking at a negative return of about 16% till May this year, and the forecast for this financial year is a negative return of between about negative 10 to negative 14%. So given that backdrop, it might be hard to understand that actually super funds are a good place to start in terms of looking at how they are doing their asset allocations. These are huge investment giants in Australia, and with compulsory superannuation since 92, they've managed money for a long time. They have a range of service providers giving them top advice, so it's worthwhile to have a closer look at what they're doing.
Balanced options are those that we look at most often for comparison. What exactly is a balanced option and what are the weightings that they might use?
Balanced funds typically have an asset allocation of 70% growth assets, 30% defensive assets. And I think probably the important thing to understand in Australia is that a lot of people invest in the default option of their superannuation fund, which is often the balanced fund. Something like 80% of people invest in the balanced fund. So it impacts a lot of people, the asset allocations that these funds have.
How often do the big guys review their asset allocation?
Look, they review them at least 6 monthly, but I mean, given the environment that they're operating in now, these funds are really looking at what they're doing, month to month, day to day. They're very in tune with what's happening. But obviously, making huge changes to portfolios is not necessarily beneficial either. So they need to put strategies in place, see what works, and then review things.
Should regular investors do the same?
Absolutely, and that's another really great lesson from superannuation funds. I mean, these, as I said, these are huge investment giants. They have a really vigilant investment process. So they're looking at looking after members' best interests. So investors really need to look at their own matters, obviously with keen interest.
What are the main trends that you've seen this year from the big guys?
Look, the obvious trend is there's been huge weightings in cash, so now the market conditions are looking better. Some of these superannuation funds are looking at maximising the opportunities and getting the upswing. So we're looking at changes from the growth and defensive asset allocations. So say in the case of a big industry fund like Rest, it's really upped its allocation from about 58% allocation to growth assets in December last year to now closer to 80%. And it's looking at greater exposure to international and domestic equities. So equities is really the hot area. Government bonds, still a lot of the superannuation funds are a bit cold on. Corporate bonds are more attractive.
In the article that you've written for this week's website, you've given 7 main tips of what retail investors can learn from the big super funds. Can you go through just a couple of them?
Sure, and these tips for a lot of investors would be things that they already do, but I guess it just reinforces the fundamentals of good investing. Things like don't think you can time the market. It's very hard to make changes to your portfolio and think that you can get a better deal. It's much better to put a strategy in place and move with the upswings of the market than jumping in and out and missing the opportunities. Another really important issue is the cost. When people get their returns from their superannuation funds this year, as we've said earlier, they're not going to be great. It's highly likely that they're going to be negative. So what people need to focus on is, okay, if that's the return I'm getting, what actually am I paying for that return? They need to focus, because that's going to erode the benefit of any performance. So really need to focus on that cost issue. Another important lesson to learn from superannuation funds is the value of advice. Now, I mean, there is a great lesson to be learnt from looking at how superannuation funds are allocating their asset allocations, but this shouldn't be misplaced or misguided as actual advice. There's nothing better than getting advice tailored to your circumstances and your needs. So superannuation funds get heaps of advice from very talented and well-informed people, well-researched people. So the same applies for individuals.
Thanks very much for joining me today.
Thank you.